Are precious metals, particularly gold and silver, still the ultimate safe haven in today's turbulent world? With market sentiments swinging wildly and geopolitical tensions on the rise, many investors are asking, what's truly influencing these ancient stores of value, and should you be considering them right now? Let's dive into where things stand. As of today's, gold has recently been holding around $3,300 an ounce, after hitting a record of $3,454 earlier this month. Silver, on the other hand, has seen some declines, dropping over 1% recently. But these numbers tell only part of the story. So, what are the key forces driving these price movements? First, geopolitical instability is a massive driver. Gold and the dollar are both considered safe havens in times of war, and we are witnessing a clear escalation of tensions. The recent U.S. strike on Iranian nuclear facilities is a very serious event. President Trump's decision to delay potential U.S. military involvement in the Israel-Iran conflict has created a period of suspense, even as Israel intensified its strikes. Iran now faces two stark scenarios: either sit at the negotiation table and agree without conditions, which could still lead to its disintegration similar to what happened in Iraq, Libya, and Sudan, or refuse and resist. In the latter case, all parties will get involved. The most immediate concern if Iran resists is the potential closing of the Strait of Hormuz, through which 30% of the world's oil and gas passes. This would severely impact Europe, China, Japan, and the entire world, causing oil prices and shipping costs to skyrocket and inflation to rise globally. This kind of inflation would compel people to turn to safe havens. Many experts are predicting that we are slowly and unknowingly heading into a third world war. In this phase, do not expect gold or the dollar to go down, as safe havens will become the foundation and financial markets will become risky. Second, we have inflation and central bank monetary policy. While Federal Reserve Governor Waller has suggested rate cuts could come as early as July, citing good inflation data, Chair Powell remains more cautious, warning that tariffs could reignite inflation. The U.S.'s Treasury interest costs have already hit $776 billion this year, exceeding defense spending. This fiscal pressure, combined with dedollarization efforts by BRICS countries led by China, is compelling central banks worldwide to aggressively increase their gold reserves. A recent World Gold Council survey found that 29% of central bankers plan to increase their gold reserves in the next year, the highest level recorded. A third underlying factor, particularly for gold, is supply dynamics. Production from major gold miners like Newmont is actually down. The overall supply side is expected to get tighter, as gold producers are not investing significantly in new exploration and development. This could necessitate much higher gold prices to justify the risks of new projects, potentially leading to significant price increases in the future. Given these powerful influences, why might an individual consider buying gold or silver right now? As an inflation hedge and for wealth preservation. In times of extensive money printing and currency devaluation, gold has historically served as a strong hedge against inflation, preserving purchasing power. Gold has outperformed the S&P 500 more than 80% of the time in the last 25 years, being positive for over 80% of that period. It's considered portable wealth and crucial for legacy protection of wealth. 2. A safe haven. During uncertainty. The ongoing geopolitical tensions make precious metals, along with the dollar, highly attractive as safe havens. When traditional markets are volatile due to international conflicts and rising prices, investors turn to gold and silver. The aggressive acquisition of gold by central banks signifies their view of it as a strategic asset in an uncertain global landscape. It's the best and wisest option right now to protect savings. 3. Tangible asset, liquidity, and portfolio diversification. Unlike virtual assets, gold offers a tangible store of value. Approximately 60% of the world's population prefers tangible assets like gold, valuing something they can physically hold and feel safe with. It's also crucial to have liquidity, cash, gold, or dollars, that you can quickly liquidate when opportunities arise in times of crisis. Including gold and silver in a portfolio can also help diversify against the risks of traditional financial assets. Now, while the experts heavily emphasize buying and holding precious metals due to long-term bullish outlooks, understanding potential selling scenarios is also part of a balanced investment approach. Achieving investment goals or personal liquidity needs. If your gold or silver investment has reached a predetermined profit target, Or if you simply need the funds for a major life event, such as a down payment, education, or an emergency, selling can be a prudent financial decision. 2. A fundamental shift in market conditions. While not currently indicated by the sources, a sustained period of global stability, resolution of major geopolitical conflicts, and consistent low inflation with strong economic growth could potentially reduce the appeal of gold as a primary safe haven or inflation hedge. In such a scenario, reevaluating your portfolio and potentially rebalancing away from precious metals might be considered. Remember, this information is for educational purposes only and should not be considered financial advice. Investing in precious metals, like any investment, carries risks. Always do your own research before making any investment decisions. If you found this video insightful, please give it a thumbs up, subscribe to the channel for more market updates, and let us know your thoughts on gold and silver in the comments below. Do you think gold is headed to $6,000 as some experts predict? We'd love to hear from you.